Hey Nick, thank you very much for joining us.
Thanks for having me.
Brilliant. Nick, you're the CEO and co-founder at Kutana. You're wearing the t-shirt. If people
Yep.
are watching this, it's there. How about we kick off with you telling us what is Kutana, and yeah, let's start there. Let's start there.
Yeah. Thanks again, Mo, for having me on. So, Kutana is the Swahili word, which is the predominant language of East Africa for to meet slash to connect. So think of us as connect, pay, and what we're really all about is how can we make it up? We believe that trade is the one of the biggest drivers toward economic opportunity and therefore economic prosperity. And what we're all about is how can we make trade in emerging markets like African markets safer, easier, and more cost effective. And our hypothesis is if we can make it safer, easier, and cheaper for businesses to do business on the continent, then more businesses will do it. There will be more trade, more economic opportunity, and therefore more economic prosperity. And that's really what we're trying to work towards and connect Africa to Europe, Asia, other continents, but also connect Africa to itself in many ways. Because
Wow.
if you look at the EU
Okay.
as an example, about 60-70% of trade within the EU stays in the EU. Whereas if you look at Africa, about 14-15% of trade stays within Africa. So all the value
Wow.
is leaving. And
Wow.
our looking at the EU, you're saying, well, the strength of the European Union is that the value staying in the European Union, the opportunities, the economic opportunities, the economic prosperity is staying in that
Yeah.
region. And
Yeah.
that's what we want to try and shift on the African continent as well and bring that in intercontinental trade up because it's very low at the moment. So yeah,
Wow.
that's a sort of brief overview about
Yeah.
what Katana is and what we're trying to achieve.
Very. I mean, I love the ambition. Not a small goal.
Oh, absolutely no.
That's exactly what we love. Absolute privilege to be supporting you in a very, very tiny way to hopefully meet those goals. And then, Nick, if I'm not mistaken, you're one of the earliest and one of the few businesses who are actually using stablecoins as part of that process. Is that right?
Yeah, I mean, I think it's become certainly a lot more and more common now. We started
Right.
off in 2023 is when the company started, and of course started trialing out different options for, well, if we're going to make this safer, cheaper, easier, how do we actually do that? And we tried all sorts of different models from, aggregating payments and trying to send them via Swift. And we went around all the traditional models that were out there for payments companies, and we just couldn't get to a level that we felt we were making the situation any better. And what I mean by that is the average quote for payments across the African continent is between 6 and 8%. And we put a stake in the ground and said we want to make it 1.5. So we started with the price and worked backwards. We thought, so how can we make that feasibly possible now to be significantly cheaper than what businesses are having to pay at the moment on average. So that led us down the path of stablecoins effectively. The traditional models weren't working for us, so we had to find a new model. And the stablecoin side is particularly interesting because what we learned is actually it's relatively easy to get money into Africa, um, but it's really difficult to get it out. And before we started Katana, and actually this was the thing that really got us to switch into Katana is we ran a consulting company in Ghana that later expanded into Germany, and it was all about helping European businesses um, explore opportunities in Africa. So market research, we would bring them to Ghana initially, introduce them to potential partners depending on their industry, and then we could go all the way to being the first boots on the ground, sales activation, all that sort of stuff to get them set up and going on the continent. And what we realized was, firstly, every client was facing the same problem. Once, once I start making money in let's say Ghana, how do I then get it back to head office, wherever that may be, Germany,
Yeah.
France,
What
UK?
makes that super difficult? Sorry to just to jump in, but
Mm.
yeah, what is it about that direction in particular which is so hard for these businesses to make it possible? Yeah,
Yeah. It kind of boils down to supply and demand. So the central banks of, let's say, Ghana, for example, they have a limited supply of US dollars. Generally, and of course, there's 54 countries in Africa, over 40 currencies and central banks and regulators and all that sort of stuff. So it's oversimplifying it, but for the sake of a short podcast, we'll please forgive me on that one. But
we forgive you. We don't know about the audience, but
yeah,
hopefully they're a
yeah.
kind audience.
But generally, in every market, it's slightly different. So South Africa's probably got the problem the least. Countries like Ethiopia have a huge problem with access to US dollar. Generally, it is you're importing more than you're exporting. Generally, global trade runs on US dollar. You need access to it to partake in global finance. So the more you export, the more US dollars you will have coming in. However, generally, African countries are net importers, and what that means is when you think about what African countries export, so you're looking at Ethiopia, coffee, uh, West Africa, Ghana's a big producer of cocoa. What they're doing is they're exporting products at their lowest point in value. So if you take Ghana, for example, they're exporting cocoa, which is then going to Europe to have the value add element, which is chocolate, and then they're exporting that back in. So so that's where the challenge is. That Africa does a lot of exports. They call it the breadbasket of the world. It produces a lot of the food. However, that's the point they're exporting it is at the lowest value that it's going to be. So that's part of the challenge. More people need US dollars to import than there is available. And then when you look at the central banks, they've got a decision to make who gets the limited supply of US dollars. Now, who usually wins in that is, well, first of all, you've got to import oil to run the energy of the company. So that gets priority as you would expect. So anything that you need to bring into the country to run it gets priority, and then by the time you and usually those the people that provide those services are big multinational companies, so they get the lion's share of what's available, and then there's a small percentage that all the sort of middle-sized, smaller businesses and individuals, of course, have to fight over. And you'll hear terms like currency queues, where you're just waiting for US dollar to become available so that you can then make your payments globally. And sometimes in certain markets, there's no accessibility at all. And it depends on, things go through cycles. When the CD strong in Ghana, for example, it might be more accessible. When it's declining, people are trying to exit their CD position, so demand goes up even more. So, it is a very complicated thing. So I'm trying to simplify it quite a bit, but generally the demand is more than the supply, and therefore people just cannot get access to the US dollars to take part in global finance, which really mostly hampers medium, small sized businesses who
Yeah.
generate 50-60% of the economies, provide
Wow.
an even higher percentage of the jobs locally.
Wow.
So these companies that contribute so much to the economies are really being held back from their own growth and aspirations because of this challenge. And
Yeah.
that's where, to bring it back around to
Yeah.
stablecoins,
Yeah.
it starts to provide an alternative to the market. It's not a silver bullet, but it's a step in the right direction, and I'm sure we'll go into it in more detail later. But yeah, generally that's part of the problem. There is supplies higher
Yeah.
than demand, and the central bank has to make a choice
Yeah.
in terms of who gets the allocations.
Yeah. I mean, maybe it's just my ignorance and naivety, but um, I mean, and I'm sure, as you said, you've oversimplified a bit and generalized, but when you say it, it makes a lot of sense, and it's kind of like, oh my goodness, like how long has this problem been out there? It makes sense if you're exporting raw materials as opposed to the finished product with the value add, then
Mm.
you get this imbalance in supply and demand of the currency. So then the stable how does stablecoin, I don't know if it's USDC or T or whatever, how does stablecoin fit into this supply demand equation and help? Like you say, it's not a silver bullet, but how does it help with balancing that to some extent? Or I don't know. Yeah, you tell me.
Yeah, yeah.
Yeah,
It provides accessibility that isn't centralized, so not one party decides who gets and who doesn't get. To a degree, it's decentralized, which is what it is supposed to be all about. So that's one side of it. It provides businesses who perhaps traditionally wouldn't have had access or would have a low probability of getting access. It allows them direct access into US dollar, so USDT. It's not an exact, exchange for a US dollar, but it's a digital US dollar essentially that it's much more, it can travel much more easily than a Ghana cedi can, for example. So what it provides businesses to do is it's another way to get in and access global finance, essentially pay their suppliers, import, run their businesses. So essentially that one part of it is accessibility. Now, as with all things, you need a buyer and a seller. And it's for physical products, but it's also for currency as well. So if you've got Ghana cedi and you want to sell that for USDT, you need to have someone who has USDT and wants to buy Ghana cedi. So and that's why I say it's not the silver bullet, because still the demand is still higher than the supply there, but it makes it more accessible, which is the first step uh, in the right direction. And really what part of the solution would be, and this is happening already actually in markets like particularly Kenya, where they're really ramping up manufacturing. So they're doing the value adds in country, and a lot of governments are now thinking that way and looking at building factories so that the value of what they are exporting, they take that cocoa, they produce it, turn it into something more valuable, and then they can export it at a higher price. So that's got a part to play, but also the stable coins provide that accessibility. They make it cheaper. They remove the need for banks, third parties, etc., that all push the price up as well. However, it's not perfect because it is decentralized. Generally, what you see is the cost of a USDT is a bit higher than what the cost of a US dollar would be via the central banks, and varies market to market. Kenya's relatively close. Ghana, you're talking maybe 5% over the value there, but businesses are willing to pay it because it's either in many cases it's either that or nothing. We can't run the business because we can't import our goods from China or whatever it may be that we need to run the company. So yeah, generally that's how Stables is starting to just to make the movement of money a bit easier.
easy.
Now,
Yeah,
okay, so the first thing is it's a bit more expensive than
yeah.
the US dollar, but I think as time goes on, those
It'll
that difference will start
yeah.
to come closer. But once you've got it into USDT, then it's super quick and easy to
Right,
send there. So you're saving the time and the money on the other side that you're paying for the
right,
initial access.
right. That's fascinating. That is, yeah. What type of time frame are we looking at? What type of kind of like saving? I mean, that's a very difficult question, I imagine, depending on the circumstance. But what do you guys find? Um, are we talking like, are you taking days off? Are you taking hours off? Like very roughly, again, generalizing. Yeah, what do you see?
Yeah. So in terms of stablecoin to payments, they're pretty much instant. You make the payment to the wallet address, and then it's done. The part that can sometimes take a little longer is getting it back into fiat. So let's say you're a Ghanaian customer, you want to pay supplier in China, but they want it in either US dollar or RMB. It doesn't matter. So what you can do is you get the CD, you get it into USDT, and then you can send it to someone who is at the other side who can then off ramp it into USD or RMB. That process can sometimes take time, but generally, and it depends on the partner, but generally what we're seeing is you can complete that full process. Now, of course, China's ahead of us, so it depends on the time of day, but generally you complete the process within 24 hours at least, which when you're looking at standard Swift approach, you're talking 3 to 5 days. And this is, for Ghana, it's the most complicated of markets where, in this, where you're going to like Ghana to somewhere like China where we don't have a presence. However, if it was Ghana to like somewhere in the UK, we could do that within, so everything, the full process would be almost immediate as well. So you're collecting the Ghana CDs, you're turning, well, what we actually do, we have a slightly different model where we already have the GBP in the UK and we just pay out immediately and then work it out at the end of the
Wow.
day. So generally, if for the customers that are on our platform that would be using a wallet-to-wallet transaction, as we
Yeah.
call it, we can process that in 4 seconds, and then you just withdraw it into your own bank account. Now, with Griffin, customers have their own bank account
Right.
already, so it's an even quicker process because the money just goes straight into their bank account with Griffin rather than yeah, exactly. So what, of course, we need to go market by market.
Yeah.
Ghana and the UK are certainly our strongest markets, and are the markets that we started in. Sorry,
Hmm.
but we'll continue to expand that, and that's kind of what we're trying to get to achieve, where everything can take around 4 seconds.
Wow.
So that's what we're trying to get to.
4 seconds is fast.
Yeah.
It's quicker than a lot of domestic payments.
Well, yeah, exactly.
Oh my goodness. I love the ambition. I just for the audience, I actually I've been not fully involved with working with you guys, Nick. And you obviously know that where we only met
Mm.
today. So for me, hearing this like for the first time as well is kind of like it's it's quite a shock in a very good way of what you folks are building. That's super cool.
Yeah, we've got this habit of saying something before working out how we're going to do it, but we've been able to do it with this one, and I think we'll be able to continue doing it. And that, just putting the stake in the ground, say this is what we want it to be, and then working out how you're going to do it is actually been pretty good for us in terms of really pushing the boundaries of what our own thinking as well.
Yeah. If we step back, you gave I mean, this is a fascinating business in my opinion, and you gave a little bit of an insight into how you saw the problem firsthand when you were doing consulting um, in market. Can you walk us through a little bit more about like, yeah, and how did you take that step from I noticed this problem to okay, right, I'm going to set up an entire
Yeah.
company to fix this? Like, what happened in between those things?
Yeah, no, it's a good point because um, we me and my co-founder Sammy, when we got together to create the company was called Startup Lounge Africa, and we were all guys from consulting backgrounds. I'd spent 7 years working in UK financial services. We all decided to get together in 2019 and start, our own company. And interestingly, it just started off doing podcasts about innovation and all that sort of stuff. And it just eventually, because we came from consulting backgrounds, you can never leave it. And it just evolved into a consulting company. Um, and then, yeah, we were helping. Actually, it was mostly we got a lot of German customers, which is why my co-founder moved to Hamburg to set up the Hamburg office, particularly in the automobile industry, um, who are really sort of. I mean, Germany in general is quite bullish on Africa, and I think from a European perspective, have definitely led the way in terms of investing on the continent as well. But yeah, so generally we started that company, and of course you're seeing the European businesses come in and the challenges that they are facing, and we also actually supported some Nigerian companies come to Ghana as well. So, and what we always continued to notice is that there was a real lack of trust in between parties and particularly from a European perspective in the markets that they were operating or looking to operate in. I think various reasons for that, but yeah, generally there was this lack of trust, and this is where we actually started the journey of how can we build that trust and remove that barrier, because that was the biggest barrier for businesses to sort of jump in, um, and it was really hard to broker that. So we actually started building a platform called Kutana Africa. So this is where the name came from, and it was Connect Africa, essentially, and it was supposed to be like a B2B marketplace where we would vet the businesses and do like uh, enhanced due diligence on them and all that sort of stuff, and then give them try to remove that trust element. But
Kind of like giving them
it,
the blue tick from a B2B
yeah,
perspective. Yeah, yeah,
yeah,
yeah.
and
Mhm.
and that worked well. But then the issue always then came down to, well, yeah, okay, we were willing to talk to them, but it came to the point of actually doing business and transacting some money. That's where it just always seemed to constantly fall down. And that's when we started thinking, okay, well, we need to get into that financial services side to solve that problem, because actually the trust is in the sending of the money, and less than so than the relationship. Of course, it's part of the relationship, but it's boiling down to, when I send this money, I do not have confidence, or do I have confidence that I will, whatever the agreement is, I will get in return. So we started thinking, what can we do, and we thought, well, we could try and build a product around escrow. Let's say where we become the escrow agent. We hold the money, and we don't release until the goods are delivered, or the service, whatever it may be. And we thought, okay, let's try it. And then we very quickly got into well, how does the money flow? And very naively at the time, we thought, oh, there's loads of fintechs out there. We'll just plug into one of them, and then we'll just do the value add escrow part. Unfortunately, we quickly realised that there was no, I guess, magic. There's a lot of companies out there trying to do something, but the whole market is so early stage that no one has got that solution that can fix everything. So that's when we started to realise, right, well, if we're going to do this escrow thing, it can't be alongside a consultancy. We're going to have to jump straight in. And it came to one of those points where we thought, we can be the consultants who are always sitting on the sideline and just complaining about things, and writing pitch decks and saying, well, yes, really sorry, this is just the way it is. Or we can try and at least become part of the solution. And so yeah, that's what we decided. Let's just pivot fully into a fintech. At the end of 2023, we sort of made that decision, and that's when we set the ball rolling and try and discover and learn more about the financial services side of the markets. And obviously, it's quite interesting, because you look at a lot of the other fintechs that are out there. Their founders or their founding team have a lot of sort of payments experience, which is great. They understand the they probably had a head start in their thinking of their understanding of the markets. However, what I always say was, we had a better understanding of the customers, because we were working directly alongside them, experiencing all the pain points along the B2B trade journey, and importing and exporting. I remember trying to import a whole bunch of solar equipment into Ghana, and it was, you know, hellish. And payments is just one side of it. So this is yeah. So I think having that experience, and knowing what it's like from the customer side, and not and actually going into building a business naively, was quite a good thing, because we set standards that we had to we had to
Yeah,
meet, and we had to find ways of doing it. Whereas if we came from a deep payments background, we might have said, no, that's not going to work. And it's like technical debt, but for the mindset. If you've been in an industry too long, then you're kind of brainwashed a bit to know what works and what doesn't, which can have its uses, of course. But sometimes, to really push the boundaries, you need someone who's a bit oblivious to the the industry, just to come in and do something. And hopefully, that's what we will
Yeah,
achieve.
yeah.
Yeah.
I love the story, especially because it sounds like, 3 or 4 different pivots, and it's like podcast, consulting, trust platform, financial services, fintech startup. But it makes, when you explain it, at least it's like the evolution and the why seems so grounded, as you say, in like the customer problem, and it sounds like as each time you solve one problem, you realize the next problem, and then it's like, okay, and that's kind of where it's led you now. But it's a very good, in my opinion, example of like action produces information. That's how as you say, sitting on the sidelines can only get you so far, but when you actually try and like jump into something to solve something, that's when you uncover the insights and get to the core of the problem.
Yeah,
Which
yeah,
is, yeah,
exactly. And in the early days, we were just taking our own personal money and just trying to send it to places just to see what's it like, just to really understand it, losing a fortune in the process. But extremely valuable
yeah,
learning experiences to say, okay, so this is how much it costs to send $1,000. This is how much it costs to send X amount of dollars. Really starting to understand the real costs and timelines to everything.
wow. Where are your do you have customers both in Europe, in the UK, and in Africa? Where do you mainly go out for customer acquisition?
Yeah, so generally, our our network, again, we're quite lucky in terms of we're quite well plugged into the cross-border trade network um, through the consultancy. So that's really what we use to sort of pilot our ideas, get thinking, because we really use the Startup Lounge Africa brand and the trust that businesses had in that to open the doors to say, can we now handle your money? Because, as a cold call, that often doesn't work very well.
That's one
But
thing. Yeah, trust
yeah,
is
yeah.
so key. Sorry. Yeah, super important.
Yeah, but generally, so we initially started out, and again, one of the things that we saw and was particularly from the investment community was that African startups struggle to get out of their home market. So let's say you start in Ghana, you could be a really great fintech in Ghana, but a lot of them, the time they struggle to expand beyond that. So we wanted to become international from day one, and again, it was just putting something in the ground and just saying it, and then just working it out backwards. So we said we're going to do UK, Ghana, and Kenya, and that's kind of where we're going to start, and we'll expand from there. So yeah, that's kind of we wanted to be international from day one, and that's where we've put our focus in as well. Now, of course, you've got the compliance side of things, and this is extremely important. You can't do anything without the right license or compliance in place, and Griffin's a big part of enabling us to get to market quicker and faster and do more beyond our initial pilot phase and really test this at scale. So yeah, that was obviously been a learning curve for us as well in terms of what kind of licenses and which parts of the world enable you to do different things, and yeah, that's been interesting
Yeah, it's hard enough
from
in
that
one market.
perspective.
Yeah, let
Yeah,
alone
yeah.
cross
So
continent,
yeah,
multiple
yeah.
markets.
Exactly,
Yeah,
exactly. But we've hired really well in that space, I think.
fantastic. Yeah,
People have come with a whole suite of experience who have really helped us to shape the strategy, and then we're actually executing on that compliance strategy right now. So, yeah, that's been great.
awesome, awesome. Nick, what is on the roadmap for Katana? What are you especially excited about over the next few months?
Yeah. So I go back to this understanding the client thing, and we have called ourselves when we started out, we called ourselves Katana Pay. And what we are now going to do is drop the pay and just be Kutana, so just connect, essentially. And what again, what we realised was that the story isn't all about payments. Payments is the initial pain point, but then what happens next for the financial services sector in Africa? So with the stablecoin payments, it can make trade easier and it can make it cheaper because you can access the currencies you need and it's cheaper to move currencies to send them. So that solves two parts of the problem, but it still doesn't necessarily solve the safer part. And that's where our sort of wider vision is starting to come to light here. Because if you look at the full sort of B2B trade flow, so you've got the payments side of things, but now we're also building a product in sort of partnership with the National Insurance Commission in Ghana called Trade Secure. And this is all about how do we make it safer to do business. And ultimately, what it is, what everything boils down to a basic financial service, but it's an escrow plus insurance product where ultimately when you've got two parties cross border, don't know each other, don't trust each other, but our Katana users, let's say, they can use the Trade Secure product to first of all protect the money, locking it in escrow, and then secondly protecting the goods themselves from anything that could go wrong. So like shipping insurance, for example, climate insurance. If you were buying a whole bunch of cocoa or whatever it was, there was a massive flood that wiped out the crop. How do you ensure that nobody loses out in those situations? So that's a product that we're building to make it safer to do business across the continent. But with escrow, and it goes back to something you said earlier, you solve one problem and create another few off the back of it. With escrow, the problem you have is, let's say I'm a manufacturer, and you want to buy 10,000 t-shirts from me. I need the money or at least part of the money, to produce the product that you want to buy. So you might make it safe for the buyer. I'd actually say for the seller at the same time because it ensures they get paid and they're not defrauded. But you make it very difficult for the supplier. They now have a cash flow issue. You create a cash flow issue. So this is where that we now need to bring the next product in, which is a trade finance product, where we will front or advance some of the capital required to fulfill the trade deal. And then when you actually think about you add up those services, you've got sort of global payments, you've got insurance, escrow, you've got trade finance. You're kind of thinking, well, you're well on your way to becoming a sort of trade bank here. Without becoming a bank. Well, we don't like to use the B word because it's big and scary. But
You can do it if
that's
you
kind
want.
of yeah, yeah.
Yeah, but I see what you
But
mean. Yes,
but
sorry.
Revolut were able to look and feel like a bank without actually being a bank for a long time. So there is ways around it, but generally that's kind of the longer term direction we're heading is how can we really um, solve a lot of the challenges with make it safer, easier, and cost effective, and then with the trade finance, pour fuel on the fire so that there's more and more trade being done, which then creates the economic opportunity, the jobs, and the opportunity for economic prosperity. So yeah, that's really the wider vision over the next, let's say, 5 years.
That is super cool, and probably a great place to let it be. And
Yeah, leave that there.
yeah, that is really, really cool. I mean, hopefully you guys can. I mean, you're already on your way. Hopefully, you can reach that vision in your time frame, and hopefully we can support you in our own small way. Where can people find you, Nick? Do you want to just shout out website? We'll obviously put this on. We'll obviously put it on the captions as well. But if you want to give a shout out to your website, LinkedIn, and things, yeah,
Yeah, absolutely. So you can
yeah,
find me on LinkedIn, Nicholas Murphy. That's my proper Sunday name. And then, yeah, just if you search for Katana Pay on Google or katanapay.com, then you'll find us there for more information. I'm always happy to chat all things trade, and we're always keen to learn more and more from businesses that are doing it and get deeper into the problems as well. So yeah, if you want to learn more, just reach out.
Nick, thank you so much for joining us on this tube strike day.
Yeah.
for explaining these really, really interesting concepts and the new world of trade finance, and especially to someone as ignorant as me. But yeah, thank you so much, Nick.
Thanks, Will. Appreciate it.